JJ the CPA here. We're going to talk about the Triple P, Paychecks Protection Program. That's just what it is. It's a program. In fact, it's not considered a loan until it's determined how much of it was not used for the qualified purposes that then is not forgivable. So in essence, this program is, here is some money based on your payroll to go use for payroll, rent, and utilities. You use it all for that, you don't need to pay us back, okay? Now, when you're looking at this, a couple of things to note. I had put together some videos. I feel like I was one of the first on this. I was looking at the act that was passed by the Senate. And so Thursday and Friday, I had a couple of examples up. And in those YouTube videos, I've put very clearly, like in all caps, two caveat changes that actually came out of the House and then into the law. So I've got them up in here in red, so we'll talk about those. But the amount that you're going to pull together to determine how much it is that you're going to get for the Triple P is basically this. Payroll, your retirement match, which is usually 3% of the payroll. The employer paid health insurance, so that's not what your employees are paying. Add that together, okay? That's the amount, okay, that you're using to then get your money, right? So then what do? We take that, okay? This is the last 12 months. Okay, so when we then do the last 12 months, we're gonna divide it by 12 times a factor of 2.5, and voila, okay? That's our Triple P money. So here's the thing, in the Senate, it included payroll tax. But check out what they have now. You see some other videos on it, but they're allowing us to defer the Social Security tax on the employer. So that's pretty massive, and we get to push it for a couple of years. So it's this. Now, the one thing I want you to note is that if you're a client of ours and you are with Alliant, we are already getting this from them and this from them. If you're with Paychecks, we are already pulling that information, so you're done. The one thing that you do need to do that we're not going to have is you need to get documentation about your employer paid health insurance. So if you're getting a monthly bill, boom, you're good to go. I think if you'll just pull a bill for December 2019, if you really want to get after it, you got all your bills for the health insurance for 19, pull them. If you got them for 20, pull them. But have at least your health insurance bill for December 2019 and then January 2020, right? Because things change. Now, don't get me wrong. If you've had a shift in employees, you're going to have to kind of look and see, well, what did I pay each month? I know that you can probably go to QuickBooks, you can look at your bank statement, but you really have to actually pull the documentation, because what comes off of a bank statement doesn't say what employees it is for, okay? But that's really probably the one big thing that you'll need to pull together if you don't have your payroll done by Paychecks or Alliant. Then you'll see in the memo, you need to pull together the payroll. And what I'm recommending is just to get the payroll that's box 5, okay? That's the Medicare wages. If you are part of a larger group, but you're in essence leasing the employees, or you're with an official PEO, it's the legal owner, okay? The common law owner is the one that gets to include those wages. So you need to get that information from the PEO or the larger group. Just saying, hey, what's the what's the payroll, what's the retirement? And if they're through PEO, what's the health insurance? There you go. In terms of being able to prove that to the bank, basically there's probably a number of options, okay? It could just either be, it probably depends on the bank, but I'm just planning on having 941s pulled together. It's gonna list everything that's there. We'll have a breakdown of the employees, because when you're doing the payroll, okay, this is only the first 100,000, okay, of each employee. And then, if you have a business and it's a partnership, right? Well, the owners can't pay themselves wages, so they're just not going to be included in that figure. But if you have a partnership, if you have an S corp or a corporation, well, the owners, they're included in with that. If they're making more than 100 grand, just like any other employee, only up to 100 grand of each employee over the last 12 months would be included in the figure to arrive at how much money you are going to get. So again, the big shift here compared to just 2 other videos, and again, I made note there, is that we don't get to include the payroll tax, and it's on the back side as well. It's not a forgivable amount, but it's because of that other provision that they put in there, which is pretty sweet. The other thing too that they made clear in the final law is that it is 8 weeks after you get your money that you have to spend what you got and it be forgivable. Okay, so if you get $75,000 and you spend the $75,000 in the 8 weeks following the date that you get the check, then you're going to be looking at where it's all forgivable if it's all qualified expenses. So if in that 8 weeks you had payroll and the health insurance and the match and rent and utilities, and this would be the 8 weeks following when you get the money. So the payroll, employer paid health insurance, the retirement match, the rent, the utilities, telephone, internet, okay? You're not going to just be able to go hog wild. I mean, that's gas, electric, water, right? So it's not going to include a bunch of other stuff. It's utilities, right? Your classic utilities. And then with all of this, before payments begin, it's deferred 6 to 12 months, okay? So at least 6, no more than 12. And then whenever you get to that point, if you haven't used all the money for the qualified purposes, or you couldn't get it spent within the 8 weeks, well, you can just hand it all back and you don't have any payments and no interest, and you're able to take care of things and get your amount forgiven that was qualified and done within the 8 weeks. And then basically then it does become a loan at that point, and that's over 10 years at 4%, so it's kind of a no-brainer. Here's what you're doing. I pretty well think we'll see the PPP come into play. I can't imagine it's going to come into play the week of the 30th, because it just takes a little bit of time to get the wheelbarrows pulled together to be able to pump dollars out for something this big. But basically, when you look, you need to be able to show the bank that you've been in business and you have these wages and whatnot. So it'll probably that'll minorly be different bank to bank, because if you're working with the bank and they know you, well, you've been in business. If you're like me, if you're working with the bank that I'm working with, they're going to know you're in business. Otherwise, I wouldn't have brought you there. Probably a simple letter from me would suffice. That's why I say, when I say it depends on the bank, well, if the bank knows you and they're working with people that you know, it's going to make this go a lot quicker, because really they're there to administer it. The bank is. That's really what their role is. Even in it, the act says that it is a zero risk loan, meaning when the bank puts it on their books, they put it as zero risk. Okay, it doesn't have any guarantees, doesn't require any collateral. It's not based on your credit rating. There's nothing to approve by the bank. Okay, anyways, so it's a loan basically if not used. And the big key word here that we want, and they'll finally get it, the banks to comprehend, is that it's a program, not a loan. Okay? And if you use all the proceeds within 8 weeks for the qualifying items, again, the employer taxes is no longer a qualifying item, but that's because we get to defer the Social Security tax. So it's just simply a no-brainer, okay? And here's the thing, no, we already have that info. I mean, if you're with a line, I mean, really, if you're a client of mine, you already have this info unless you have a separate group that's doing your payroll, but it's gonna be simple for you to get this information, okay? It's simple. It's 12 months of payroll, okay? You're not gonna be able to get the money Monday. Not gonna be able to get the money Tuesday on the triple P, okay? So you wait for the quarter to close. Now, if you already ran your final payroll, well, then just start pulling your numbers for the last 12 months. There you go. Get your health insurance. So get together some bills on that, okay? And then we're just waiting for the ATM machine to open up, ready to rock. And I will let you know about these 3 banks clients once they are officially approved to do it. And then we're going to work out, the system, because if they're like, oh, with our bank, JJ, if they're a client of yours, you sign this. And then if you'll send us this, this, and this with this, then, see what I'm saying? So we're going to streamline this at the banks. And so there doesn't really need to be an independent connection right now, because all that's going to do is slow things down, because the bankers right now are trying to figure this all out and get their hands around it, okay? It's not the time to introduce and go to lunch and, here's who I am. And it requires no relationship, okay? What it requires is getting a little bit of info and getting the money so that you, as the business owner, can get your employees paid or keep them paid. And at the end of the day, you deserve this help. You're going to get it. The PPP, if you can get it, you should. Who can? Those that have payroll. Who gets a COVID-19 disaster SBA loan? Those that can't get the triple P. If you get an SBA COVID-19 disaster loan, you'll have to reduce down the amount that you qualify for the PPP, and then whatever amount you get from COVID-19 disaster loan, that dollar amount will be the amount of your PPP that will not be forgivable. So I've had questions, well, should I get both? Well, technically you could. It's going to reduce it down, and you're going to end up with less of this forgivable, because they're to help with the COVID crisis. It's not, the PPP isn't coming for seconds, so to speak. But the PPP is so much better, because not only forgivable, no credit required, no collateral, you're not guaranteeing it. And, you're borrowing it based on payroll, but you're getting to use it for rent and utilities on top of the things that you pay for your employees. So I'm ready for it. I'm totally ready for it to come into play, and I'm sure you are too. So, hey, thanks for listening. Nice big compact review of the triple P here for clients. I will let you know when I know. I mean, the bankers that I'm talking to, these are presidents of the bank, and they're going to have stuff from Black and White, and they are on top of it. So once we know, you will know. Once we know from the government, here's what's going to be acceptable, okay? So we can take a deep breath and just know we've got the info. Now we're just ready to get the money and then do what it is that you're supposed to do with it. And again, the reasoning for that 8 weeks is they don't want you to hold on to it. That's going to be burning a hole in your pocket, because whatever you don't spend on these qualified expenses within 8 weeks is not forgiven. And so I'm going to be doing another another video, because there's some real caveats if you've had to let people go. So I don't think I really have any clients that have run into that, because they've just retained their employees. But if you've let some go and you're hiring new ones, or you've let them go and you're bringing them back on, there are some factors that you have to look at when it comes to the forgiveness, but it's kind of irrelevant on the front side. And then remember what I had talked about, which was there's no reason to not just get these dollars, okay? Now, you can, if you just are home, you have the analysis and you want to go, well, how much of that, am I going to have in an 8-week period? So you could figure all that stuff out, right? And then you can say, well, JJ, I'm going to have of this expense, 65,000, but when I look over here, because it's the last 12 months and I had higher, I could get 70, but I think I'm only going to have 65. Get the 70, okay? Because once this is done, okay, and then it comes time to do payments, you can just say, you know what, I got 70, I only needed 65. That's my qualified under the covered time period, so here's your $5,000. Or you needed that for something else that didn't qualify here, okay, right? You needed it to do something else in your business. So at the end of the day, you're going to come to this period, you're going to say, hey, here's my expenses for these 8 weeks, okay? It's $65,000, okay? We're going to have to prove it. That's when there's going to be some work required, okay, is on that end to get the loan forgiven. We say, hey, here's my $65,000 in qualified expenses. Here's how I can show that I spent it over this time period. And then it's going to be forgiven. But there is some minor caveats because, it's based on payroll. So I'll go through that because that'll be a real calculation. But when you all see this page that I put together, jjthecpa.com/plan, you most likely will not see this there in the morning. And it might even be later this week that I put it together, because in some ways, it's technically irrelevant. Get what you can, and then what you don't use, you can pay back, right? It's just like when we were younger, right? Mom and Dad say, like, how much do you need to go to the movies? It's like, well, I could, why don't I take $20? And they say, okay, here's 20, bring me back the change, okay? So you go to the movies, you come back, you spend $18 at the movies. They're like, hey, you got any change? It's like, no, on the way home, I got a Slurpee and a Snickers. And so I don't have any change. I spent $18 at the movie. And then, whoever was your stricter parent is going to say, well, you owe me $2 then. And you're like, why? It's like, well, because I gave you $20 to go to the movies. You spent $18 at the movies. You had $2 left over. That's what you owed me. You went and spent it on other stuff? Well, that's what you owe me, is the $2. All right, hey, boy, I'm glad to be on the other side of this act. At least we now know what cards were dealt, and we now can be taking a deep breath. I know we now need to get the money in, but remember, we're all in the same boat. Call your mortgage company, call the student loan, talk to your vendors, let them know money's coming, you're gonna get things even, but then look for emails and some videos that are going to come a few weeks from now, which the pace will change to, okay, you got your money now. Here's the things to make sure that you're spending on. We're going to know better what receipts that you're going to need. And just, you're going to need receipts and canceled checks, okay? That's what you're going to need, receipts and canceled checks on these things back here, okay? The payroll reports for the things that are back here. It's not going to be that hard. If you think about it, there's not that many things there. Rent, utilities, and payroll, and health insurance, and retirement match. You're going to have all those things. But you'll be getting some videos on how to go through that and document it, and probably come up with some worksheets and all that good stuff. But for now, let's get the money in the pocket of you, the small business owners, my clients, so that we can get the relief and get back as soon as we can. Now, of course, the mayor of Oklahoma City, we have the home and shelter, stay in home shelter, whatever, we're supposed to stay home. The governor last week saying, businesses shutting down for 21 days. So we got to get past those things, but at least there's going to be some monies coming in. And then there'll probably be a number of questions like, okay, I have the money coming in, but we're not open, so what do I need to do with it? Well, boom, look at the other videos. We have the employee retention tax credit. But now if you're using monies from PPP, well, you're not going to get the tax credit on those dollars that you're spending. Oh, and then last thing, on the PPP, to the amount that you use it for qualified expenses, It's not taxable to you. Okay. Now you don't get to deduct the dollars that you spent it on, right? Because they weren't your dollars; they were gifts. It was a gift from the government. So, I told you the example: if you borrowed, or if you got 70,000 on the triple P, and you had 65,000 of qualified expenses, therefore you owe 5. Okay. Well, on your P&L, okay, the 70,000 that came in the door, it's not income. So in essence, it's like a liability. It's a liability to the extent of what you don't spend. So then as you spend on these things, it reduces down your liability. Meaning when you're paying the payroll, when you're paying the rent and the utilities from the monies from the triple P, that's not a tax deduction to the business because the money that came in to pay for that, you didn't recognize it as income. But you know what? It's a fabulous deal. Okay. Of course it's neutral. Okay. And I had somebody said, well, the government finds a way, that we didn't get to deduct things. But here's the thing: even if you got 70, okay, and then you spent 65, okay, you still got a $5,000 equation there to work with, okay. But at least the way that it's set up, hear me on this: the 70 that you take in and the triple P, okay, it's all a liability. But then as you spend it on the qualified expenses in the covered period, the 8 weeks, you work down that liability. You owe less and less and less and less. And then when you get to the end, the $5,000, you're going to pay it back, whether it's immediate, over time in that example. Okay. But you're not recognizing that $5,000 as income. So really, there's nothing in here in the CARES Act or the Family First Coronavirus Act that is hurting us. There's nothing that they backdoored. It's available to everyone, especially like with this 4th tax credit that came into play. So, all right. Hey, I appreciate you. If you've made it to here, thank you. It's just getting conversational in some of the videos. For those of you that are tuning in that aren't clients of mine, thank you so much for watching. Boy, this is interesting times, very interesting times. But here's the deal: we're all in it together, and we're going to get through it. And then don't you ever forget, you've never met a business owner quite like you. All right, we got this. Have a great week. Feel relaxed. Now we just wait for the triple P money to come in.